Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, October 24th, 2022. Thanks for watching. A quick look at your McHenry County statistics for the last 7 days. We had 142 new listings. We have 108 went under contract, 103 closed sales, 59 price changes, and 24 on the private network. Now, here's some interesting things. Looking at 2021, we had 148 new, so not that different than this last week. So this week we had 142. Last year, this week we had 148. Not very different. Here's the big difference. Last year, this week, we had 195 go under contract. This week, only 108. So that is a result of those higher mortgage rates that we're seeing. Mortgage rates have come up over 7%. They are higher than they've been in over a decade. A long time, for a long time, we had, record low interest rates, and now we're creeping up. We don't have record high. That's a good thing. So keep in mind, many people remember when they were double digit mortgage rates. So we're not there, but they are much higher. They're more than double what they were this time last year. So we are seeing the effect of that being that there are less homes going under contract. Buyers' money, your money's not going as far. And, it's the affordability is just not the same as it was. Now, some of that does have to correlate. Some of that correlates also though with the average income has gone up too. So it's not quite as bad as it seems, but it's not fun. If you're a buyer out there right now, I know you're not real happy if you're getting locked in at 7.25%. That's not a great thing. Getting back to the numbers, we had closed 133 sales this time last year, and we've only closed 103 last week this year. So again, 133 closed this week last year, 103 this week this year. And again, 195 under contract last week, last week, and only 108 now. So we definitely are seeing a pullback as a result, which was the whole point of the mortgage rates being raised, was to slow down the economy. We had over the last, couple of years, we've had record low interest rates, record high prices, and people's income is just not going up as quickly as the prices were going up. So we saw this affordability squeeze, and it's made it really tough for buyers. So we're seeing the results of that now. Now, that being said, I did have a closing today, and the people are thrilled because they're getting a bigger house. They're still really happy because it was time to move. So, I keep going back to every week that it depends on your motivation. What do you need? I still have cash buyers, people who are downsizing. They've paid off their house that they've been living in for the last 20 years. Their kids have grown up and moved away. It's time to sell the big house, get a smaller house. They're going to be cash buyers. So we still have people buying and selling. So please do not be misled to think that the housing market is crashing. It is slowing. It is for sure slowing. And I just read an article today in MSN.com that I'll post in the comments here so you can read the whole article. It was very interesting. It was talking about, is the housing market crashing? Because everybody thinks, there's a lot of people that think that the housing market is going to crash. And that's just not simply what economists are presuming is going to happen in the next year. A lot of people are saying, when do you think the housing market is going to crash? And most of them are saying it's not going to. That's not going to happen. And here's 5 reasons why the housing market is not going to crash. According to MSN and economists that they interviewed, number 1 is inventory is still very low. And we've been saying this all along. Prices are still holding relatively higher than they were this time last year because we still have low inventory. I listed a house this past weekend on Thursday, had an open house on Saturday, had a contract that afternoon, well over list price because the buyers had lost out on previous homes. It was the perfect home. They wanted it. They came in ready to offer a big number, and they got it. We had several people telling me that they were writing an offer. So it would have been a multiple offer situation again, but they came in with the greatest offer ever. So my sellers took it. So we are still seeing good houses sell really fast, and we are still seeing multiple offers happening regularly to good houses that come to market. So inventory still super low. So regardless of what's happening, I'm getting a call. I had to cancel that. Number 2, builders didn't build quickly enough to meet the demand, which is keeping inventory low. Number 3, demographic trends are creating new buyers. The millennials are still very much interested in owning their own home. So those people are still out there wanting to buy their first home. No, and people working from home still needed a bigger house. That was a huge trend after the coronavirus first started, and we're still seeing that. Number 4, lending standards remain very high. We do not have people getting loans simply by saying, yeah, I make $500,000 a year, give me a house. In 2007, that happened. There was no checks. There was no verification of income, no verification of employment. If you told a lender that you made $200,000 a year, they believed you and they gave you a loan based on what you told them. Now, we have very strict practices. Right before closing, the lender is going to call and verify your employment, that you haven't been unemployed or been laid off since the time of writing your application. So there's all these new lending standards that are still in place and holding our mortgage industry to very, very high standards. Number 5 is foreclosure activity is muted. Now, there was an interesting thing in this article saying that of all of the 50 states, Illinois is the number one, has the highest rate of foreclosure than any of the other states, followed by Delaware. Very interesting little statistic there. Not that it's a huge amount of foreclosures, but Illinois is leading foreclosures in that state, in that area. We also saw in this article, they were talking about how that the Midwest is going to feel the pullback of prices the least. So areas like California and Florida and Arizona, places that saw huge price increases over the last 2 years, like they saw like 50% price increases. I mean, their prices were out of this world. Those places are going to see the largest decline in the prices now. They're going to see those prices come down. In the Midwest, we didn't spike quite so high. We spiked, but we didn't spike as high as those places did. So we're going to not see quite as much of a decline in our prices here in the Midwest. That was another thing the article said. Some other interesting core numbers that we want to look at. Home sales fell 19.9% from August 2021 to August of 2022. 19.9%. That means the number of sales, so the number of homes that we sold, fell 20% from August of 21 to August of 2022. So again, we are seeing less homes being sold because those interest rates are deterring some buyers. The National Association of Realtors says that home prices in August of 2022, the average median home sale price in the United States was $389,500. In the spring, the median sales price was $400,000. So we are seeing that a little bit of pullback and correction in those prices. Homes rate of appreciation, though, according to NAR, was 7.7% from August of 21 to August of 22. So while the prices did go up and they have corrected some, home appreciation is still cooking along at 7.7%. That's great. If you're a homeowner, you've still got lots of equity in your home. Prices are up 39% still. Okay, even today, prices are up 39% since the beginning of the coronavirus pandemic in March of 2022. So even though we are seeing prices correct, they are still up 39% on average nationwide since the beginning of the coronavirus. So that's a look at your statistic of what's going on in the real estate market nationwide. In McHenry County, we are still seeing strong sales. We are still seeing homes that are ready to go. If they're priced right, they are selling very quickly. We have very low inventory. We're still at about a month and a half's inventory around McHenry County. We're still seeing the average days on market at about 30 days, which is still relatively low given what we saw in a normal market. So we are still in a seller's market. Remember, anything under 4 months inventory is a seller's market. We have 1.5 months inventory. That is a seller's market. We will see that inventory begin to creep up. So we are in a shifting market, meaning we will be shifting towards a buyer's market eventually. I don't see that happening anytime soon. According to Barry Habib, who is my favorite economist to follow, he thinks we're going to see interest rates fall below 5% in the next 6 months. If that happens, and we still have low inventory, it is going to be another feeding frenzy for the buyer's market in 6 months. So we'll see what happens. Of course, I do not have a crystal ball, but that's what's happening right now in McHenry County real estate. I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. Thank you so much for watching. Have a great rest of your Monday. Bye-bye.